We are looking at the past picks now from David Burrows, president of Barometer Capital Management. Pretty well exactly a year ago in early March, David selected these three. We'll start with the Alta Gas. This is one of your biggest positions, and it raised its dividend recently in September, so you still like it, obviously, up over 21%, including the dividend, since you recommended it.
Yeah, this is in the sweet spot. They have a very diversified energy infrastructure business. Part of it's regulated, part of it's not regulated. We think that they probably could see a 10% plus cash flow growth over the next 5 years. They've got lots of interesting projects. And when we were making these recommendations a year ago, if you remember, we were headed into spring. Markets were getting a little mushy. We were looking for things a little more predictable. And this group sailed through the summer very, very well last year against a lot of other groups that didn't. And
do you hold about 5 to 7 of these types of companies?
Yeah, we currently have, I'm going to guess, 7 or 8 energy infrastructure companies as part of our portfolio. It would make up in our income strategy about 13, 14%. We've taken it down a little bit as we've been raising our financials exposure, but it's a core part of our portfolio.
Is there any overlap with these companies, or are they all in sort of different segments?
So, there's energy infrastructure companies all over North America. And some of them are regulated, some of them are storage companies, some of them are processors, some of them are transportation, some of them are all of the above, some of them are power production. And so our basic belief is that, it's like going back to the 1990s. You've got back then the internet didn't have enough bandwidth to put all the data through the pipe. Today there's not enough bandwidth in the pipe system to move energy to market. And where there's a squeeze in supply, you can get pricing. And most of these companies are recognizing and starting to raise their tolls and raise their fees, as they're also getting volume growth. So people say, well, energy infrastructure is expensive relative to the last 10 years. Well, you never had volume growth like we have currently. So you sometimes can't look at things through a rearview mirror, and I think going forward, we're likely to see multiples continue to expand for this group. They're very predictable. Okay,
David. Williams Companies, you recommended. You sold this in October at 35, so you made a profit. You got out because why?
Well, again, this falls into the energy infrastructure space. This is midstream energy infrastructure in the U.S. It's one of the few that is not held inside a master limited partnership, which makes it attractive. We've had quite a number of these companies in the portfolio over time, and I would still buy it today.
Okay, and then Microsoft, you recommended at 31.56. You were stopped out, speaking of stops, at 31.25. Excuse me, were you disappointed or were you happy with that? It was fine.
Well, look, as we say, they don't all work, unfortunately. Right. I think that it's interesting, technology has been a very unproductive place to be over the last year. Notwithstanding Microsoft, I mean, whether it's semiconductors or software or hardware, it's been a very difficult space to be. So, as things got difficult last summer, technology sold off. We thought perhaps they had some room to move with their tablet that was coming to market with some of the new software refresh. And realistically, the pickup on the tablet, the Surface, has been subpar. And frankly, I think one of the best things they could do was make their Office platform available for iOS, but they don't appear to be willing to do that yet.
All right, David, those are past picks. Microsoft, Williams Companies, and Alta Gas, which you are still holding. We'll come back right after this break. More questions from you for David Burrows on North American Large Caps.